For today's session, I'm going to go through what a multi-key entry system is. We're going to talk about gaps, and then we'll talk a little bit about what you can do once you're in your position to help maximize your profits. And then if there's time, we'll do a Q&A after. So what is a multi-key entry system? So a lot of times what I've seen from the group and what I've seen specifically from a lot of Jake's strategies is he's looking for conditions to be true to enter a trade, and all those conditions have to be true at once, and then he'll enter when those conditions are true. A multi-key entry system is you're basically turning different keys and orders, or what you're doing in code is you're setting a bool to be true, and then once that bool is true, then it looks for the next one, and then the next one, and then once they're all true, then you enter. So one of the things you can do for this is say, he's been trying to build a reversal system. So if we go to our chart here, and I will remove the D value here for a little bit because we're going to talk about the multi-key first. You can do this with small time frames, large time frames. This will go into giving you guys some ideas to help build a scalper or large time frame reversals. So if you wanted to use an oscillator, what you can do is, let's just go find stochastics here and apply that to our chart. So let's say you want a reversal system. Stochastics is a great way to enter a reversal system. So what I do is I have a 2-key or sometimes 3 or 4-key stochastic method that you can use for scalping or for large time frames, and I'll show you the difference here. So if you're looking at your chart here, you want to enter maybe right here. So what can you do to capture this? So what you're doing is entering a bool that you're going to set to true once stochastics goes below, say, 10. So to highlight that on the chart here, I'm going to change my cursor to this. Hopefully you guys can see this. So what you're looking for is maybe stochastics to go below 5, and this is the 1-minute chart, so just keep that in mind. But you want an extreme oversold or an extreme overbought condition because those are high likely scenarios where we would see a reversal. So what you're looking at here is setting a bool to be true. So you'd code it out where you'd be like a private bool, oversold long, oversold short, and then you would set that in the code. And we can go through a little bit of that after this. But basically what you're doing is you're setting a bool to be true here, but you don't want to enter there. Traditionally you want to wait for it to confirm the reversal. So, okay, you guys can hear me? Okay. Rimjob, you have your headset muted, so if you look over your voice, yeah, there you go. Sorry, I didn't mean to. RJM, not the other word I said. So you're looking for a bool to be true. And then what you could be doing is waiting for, say, an EMA crossover if you're waiting for the price to come back above, or maybe you're looking for it to be under 5 because you want it to be super oversold, and then you're waiting for it to come back up. So maybe you would have a second entry condition where you would enter once it gets back above, say, 20, 25, and you can set it as a variable and then optimize it and see, and then obviously do all of your testing. But what I like to do is the multi-key systems because I'm looking for a confluence of conditions that tell me to enter a trade. So you're looking for a scenario, which is your first key that you're turning, your first bool that you're setting, and then you're looking for entry conditions. So you want the scenario to be true, and then you want your entry conditions to be true. And that's what I consider a multi-key system. And I don't know if you guys have done that or not. What kind of questions do you guys have on that, or is it pretty straightforward? And you can either put questions in general chat, Algos Trader, or if you want to talk on voice, that's fine too. And if you guys don't have any questions on that, I'll move on to the next subject. But basically what you're doing is you're finding, this is really good for reversal or counter trend trading, because you're looking for a trend to be exhausted, and then you're looking for, so you're setting a condition to be true once the trend is extremely exhausted. So whether strength is super high, you could use RSI, any type of oscillator, or you could use a confluence of oscillators and put those, you could have where you have like 5 slopes have to be true, and then once they're all true, you're looking for that reversal confirmation. So you could use it for both said. So you can use it for the scenario. So you're looking for the oversold to be like under 5. Or if, let's say, we wanted to go to the 15-minute for a larger time frame trade. So, if you're looking to capture this reversal, say yesterday, you could say, okay, I want this to be under 10, and then I'm going to enter once it's back above 20. So you would have entered on this candle, and it may not have been the best trade. Yeah, but if you would have held to close, it would have been profitable, but likely you would have had to have a good management system in order to avoid a loss here. But well, one of my system I uses is a 3x stochastic. So I'm looking at 3 different length stochastics or 3 different time frames. So I might use the 15-minute stochastic to find the overall trend is down, and then if I want a faster entry, I might use a 1 to 5 minute stochastic to be true. So I want the scenario on the higher time frame to be true, so that's what's setting my bull to true. And then I am then entering on a lower time frame so that I'm getting a more precise entry. Yeah. And another thing you can do is you can set, a bar since uh, the so the bull was true. So let's say you want it to only be true for the next hour. So you say, I want this oversold to be true, but I only want to enter in the next hour. So you can have a bar counter, and then after 60, it sets it back to false. So then it has to wait again to fire. I have started to play around with that, and because sometimes you don't want it to be true, say 2 days ago, and then all of a sudden it enters the next day because you set it to be true 2 days ago. So usually you want to set your stuff to reset every day. So I just do is first bar of session, and then I reset all of my stuff to false to make sure that I'm not carrying over my keys that I want to turn. And then yeah, so a stochastic, I forget the exact breakdown, but it's like a weighted. It takes into account a couple of things. So I think I have. Let me see if I can find an explanation here. So a stochastic oscillator is a momentum indicator comparing the closing price of a range to its price over time. So basically what it's doing is it's a moving average oscillator comparing price over time compared to current, so it's like a slow versus fast. It's similar, I suppose, to say like a MACD oscillator, if you're familiar with MACD. Uh, Kajolnir. How is it appropriate to use something like this since I'm new? I haven't gone through the training videos yet. I'm sure a lot of questions will be answered on their own. Yeah, I'm not here to teach you how to code. I'm here to help you, point you in the right direction to make more profitable strategies. So that's like the purpose of hosting this class for Jake today. So you probably want to learn a decent amount of C sharp, or if you want, you know, learn how to use the strategy builder. So I think I just froze my screen. Yeah, the strategy builder. Yeah, so like if you want, I'll just go through. We can code something real quick here. So we'll go stochastic. We'll code it together right now. 2-key. So we'll code exactly what I just said. So we'll go stochastic 2-key, but for the newbies here, we'll code it in the strategy builder, and then we'll go into the code after to adjust some things. So do it on bar close, We don't. We're not going to use. We're going to use two different length stochastics. We're not going to use two different data series to make it simpler. So we have to then set a variable here. So we're going to say we want a oversold variable. So we're going to make that a bool. Default, we want that to be false. And we want an overbought. I want that to be a bull. I want that to be false. And this is going to be super simple, but we're building a scalper here or a large time frame trader. It can be used for both. So the effectiveness of it will be how you take it from here, but I imagine this should be profitable from the get-go based on my past experience. So what we're looking for here is to set the entry condition variables, the first key, and then so we're going to make 4 sets here. So we'll do the first set is we want the indicator stochastics, go find that. We'll do fast stochastics probably good. So you could use stochastics or fast stochastics. If you use the regular stochastics, you'll have to set the value plot, and there's D and there's K. So I believe that there's the smooth line and then there's the fast line. And I believe D is the smooth line and K is the fast line. That could be, well, here it shows you blue is the smooth. Yeah, so let's use stochastics since we have it up on the screen. We want the smooth line, so we'll go with the blue line. We want D. We want that to be less than a value, so we're going to go miscellaneous numeric value. We want that to be less than 10. Okay? And then when that is, we're going to go assign our set oversold to true. So that's our first key. So we're going to copy this just to duplicate it, and then we can go edit this. So we can edit this to overbought, true, and we can edit this to, let's say, above 90. So we'll say greater than 90. Okay? So those are our first keys. So then we will then set our entry conditions based off of these variables. So we're going to say I want my variable oversold. So we're going to set our, let's see, is it true in here? I forget. Yeah. So we want this to be true so that our key is true. And then we want, let's say, it to come back above a certain amount. And we'll say 25, and we could play with it. We can assign a variable in the future, but let's just make it simple here so we're not, just make it super simple so you guys can take it from here and make it whatever you want it to be. So then we're going to say we want this to be greater than miscellaneous numeric value. And you guys can follow along and literally make this in your NinjaTrader right now. So there's our entry conditions. Super simple, based on 2 keys. And then we want to enter a long position, default quantity, we'll say long. So there is our long position. Based on what we're doing is we're waiting for the blue line to go below 10, and then we're entering when it comes back above 25. And then we're going to duplicate this and do the same thing for shorts. So in this case scenario, we want the overbought to be true. If you guys aren't talking, just do me a favor and mute your mic so we don't get background noise. Appreciate that. We want this to be less than 75. And then we're going to enter a short and call it short. And that's it. That's literally making a strategy using 2 keys in a few minutes. So you can look at the code while you're doing this. It'll pull up your code and it'll show you. If you want to keep using the strategy builder, you can't unlock it, but you can look at the code. So you can look at the code if you, I do this a lot, by the way, if I'm just looking to add something to my personal strategy I have already, I might use the strategy builder to make the code for me if I'm having troubles with it. It's a good way to have NinjaTrader program for you if you're new. I definitely use it a lot, and I still use it a lot. That's why. So let's go ahead and set our stop targets here. Let's do a profit target from entry single signal long, and we'll do ticks, and we'll just do 20. And then we want a stop loss, entry signal long. We'll make this a 1-to-1 simulate stop. No, we'll just make this a 1-to-1 risk reward, and we'll do the same thing for shorts. Profit target from entry signal short. Now, I've seen Jake argue that you want the same profit target and stop loss for longs and shorts. I have found this to be 50-50. So shorts, it's usually staircase up, elevator down. So you'll see, we slowly move up and then just huge profit taking. Slowly move up, huge profit taking. And a lot of times, the moves are not equal. That's why I usually split them, but you're setting yourself up for a little bit more of overfitting. So just keep in mind it can make you more accurate in the short term, but you might need to re-optimize your strategy if it becomes less effective. That's called algo decay. It does happen. So that's it. That's our strategy. We can compile it and we can throw it on the chart and see what it looks like. I can unlock the code, give it a second. And just being super slow today. I don't know if the outage has been affecting NinjaTrader or not. I don't know if you guys have noticed that, but let's unlock the code so we can do some more stuff with it. And I'm going to immediately do a couple things here. I'm going to immediately set the slippage to 1 just so I always make sure I'm including slippage if I forget. I like my stuff to exit on the cash session close, so I always set my exit on close to 3600. An exit based condition, yeah, we could talk about like an indicator exit. Is that what you're asking? So if there's like a condition where something happens, we exit instead of like a pure stop loss. Sure. Yeah, so just FYI on how I want this to go. I'd like to go through what I had pre-planned, and then yeah, we'll open it up and we can do that at the end. So I don't think it'll take too long to get through these 3 things. So then we'll do a Q&A, and if you want to go through that, I'd be happy to show you. So we'll just throw this on sim mean reversion. There we go. So on bar close, on the 15-minute, the stops that and profit targets I have probably aren't great, so we're just going to add this to the chart, but we're not going to enable it. And we're going to go see if this works with a scalper and see if I made you guys a scalper. So then we're going to enable stochastics 2 key, enable, apply. I think I need to change it so it shows up on the chart. Yep. And I need to reload. Oh, what is happening here? Oh, you know what we need to do? We need to go into the code and make sure we're resetting that variable. So I'm just going to open, let's see, do I have another editor? Okay, so let me go get some code here and I'll copy paste. We'll show you guys that. So here it is. So what we want to do here is after the start here, we want to reset our variable every day so that we're not getting a ton of trades right off the bat like that. So we want this to be false on the first bar, and we want this to be false as well. Alright, let's update that. And we'll go back to our chart and reload it once that gets done. Saving it real quick. Okay, we're going to reload the Ninja script now. And there we go. So one thing we also didn't do is we didn't make sure that our market is flat. So way to do that is simply add this to the beginning of your strategy. And I'll show you what that is. So right at the beginning here, we're going to go if we are not flat, we're going to return. So we'll do that, and that'll make sure you're not flip-flopping long short based on conditions. So that's just simply if, and I'll share this code with you guys too if you guys want it at the end here. That's no problem. All right, so let's reload the Ninja script. Should look a little less crazy. Oh, so yeah, there's your scalper. It's a pretty wild scalper. Is it profitable? I have no idea. We can check it out. It's probably trades way too much though. It is not profitable. So we either need to change the time frame. Yeah, the thing is trading way too much. Oh, you know what we didn't do? I know what we didn't do. We also want, wait, this is the wrong one. We also want, when we enter a trade, to reset the condition. So when we enter long, we want the oversold to be false. I was wondering why, it was trading so much. And we want, because otherwise those conditions are just going to be true all day, and you're just going to be taking trades like crazy. So, all right. So we want to reset that when we enter a trade so that we're not taking trades like crazy. So we'll save this and we'll reload it one more time. That should make it way better. Yeah, okay. Way less trades, way less trades. Now, the profit targets and all that, like I said, might need something different. But it is a profitable strategy this week, so it made money this week. And we did that in 5 minutes. We made that strategy. Now, that's only over a period of 5 days, but that's a good start. So here is your 1-minute scalper that everyone wanted. So what we're doing is we could probably capture a lot bigger moves as well. So what you can do then, if you want to take this further, is you can basically create a variable for the long and short here. So let's say you wanted your, this to be different. You can then, I already have that coded, so I'm just going to go copy. The problem with scalpers and trailing stops is you're inherently not going to capture what you want. Now, if you wanted to say have a squeezing stop where maybe it hits your price target and you want to capture more, I just haven't found it to work out with a scalper. You need to be doing it on larger trend moves that you're trying to capture. If you're trying to capture $100 a trade, you're never going to do that with a trailing stop. Because let's say in order to have it capture the move you want, you need the flexibility of it having a wide range. Otherwise, you're going to get wicked out over and over. And so that's why I don't use trailing stops on scalpers. But let's say you have a 15-minute mean reversion system that you're trying to capture, $1,000 to $2,000. Now, when it hits your profit target, if you want to convert that to a trailing stop and have it say capture, an extra 40 ticks, and let's say you make it, and you're moving your stop up, that might work out. And I've have systems like that do that. So let me add add these stops here real quick. I'm just going to copy the code from another strategy I have to make this easy. There we go. And I'm just going to put this at the top. Some people put it at the bottom. I've done both. I do this a lot where I'll just copy code from another strategy and put it in. It just saves me so much time. And then we'll do long PT, long stop loss, short PT, short stop loss. So there, and we'll switch this to 20, which is what we just tested. And we'll save that. Move that code out of the way. Now, if we want, we can go into the code. Once this saves, we go into strategies. We got our stop losses there. So let's say we want to see if 40 is better. And you could use your optimizer for this. I'm not going to sit here and go through it all, but I'm going to show you, you can change this. Try to capture bigger moves. Yeah, so now it's capturing twice what we have there. And looks like it made the drawdown bigger, but it didn't really increase profits. Maybe we could do like a 2-to-1 risk reward. So if we want to have, say, the profit be 80 and the long profit be 80. I need to redo the order of these, but that's just a UI thing. So you can see it changed some trades to losses now, but we have a 2-to-1 risk. So it's increasing our drawdown and our profit target. So that's something you can play with though. And I'll give you guys the code for this right now. I'll throw that in the general chat. That's a free. Feel free to add more stuff to it and do whatever you want with it. You'll have to copy paste that code into your. Well, here, let me get you the CS file so you can just drag and drop the CS file. Documents, trader 8, bin, custom, strategies. We did stochastic 2 key. I have a lot of strategies. There it is. And that'll be put in the general chat for you guys, and you guys can have what we just coded and play with it, test it on different tickers, different time frames, optimize the profit and stop loss. There's a lot of stuff you can do with that, but that's just an example of a 2-key method that you guys can use. So let's talk a little bit, and let's open up the questions on what we just did, and then we'll move on to position management once you're in a trade. So any questions on what we just talked about or coded? I'm just waiting and see if anyone has questions, but if no one has questions, we'll move on to position management theory. This will go into, I believe, CMB, you asked about exit-based conditions, and we can get into that in this part of it. So a position management, there's once there's two parts to every strategy. There's the entry system and the exit system, right? So we just talked about an entry system you can use using the 2-key method, and now what can you do? And we'll play with what we just made and show you different exit systems. So what can you do to maximize your profit once you're in a trade? Because if you're looking at this, like this captures a wonderful reversal here. Look at all that meat that we're leaving on the table. And vice versa here, you have this long, that's a really good long, but you're missing, it was a loss and this should have been a banger, right? And the short was a loss but should have been a banger. Now this long was profitable if you would have held a little bit more risk, but most likely any system, we're just going to chalk that up to a loss, right? And we can go through some of these and look at them. I personally really like to look at how my trades look on a chart and then decide what it needs. A lot of people will just throw a bunch of pickles at the wall and see which one sticks. I like to go and analyze my strategy and say, okay, it needs something. What does it need? I like the entries, but it's not profitable. So I like these entries. This long does end up being a winner, but you would have to have a lot of risk. So do you then say, if my entry isn't perfect, I'm okay with that, and I'll have a 25% win system, and my losses will be $100, and my wins will be 1,000. So I'm going to take my kicks, but I'm going to hit my home run eventually. Or do you want to hit for average and have a one-to-one risk system? They all have different ways to capture profit, and they're all effective in different ways. So you could either have a two-entry system where, let's say you have a tight stop loss and then you enter a second here to move your entry down, and I've done that a lot in my scalpers. So you might have a second entry here, and then if you enter twice you might have a shorter profit target so that you have a higher probability of entering that. That's one way you can talk about order management, is having multi-entry systems where you can do two or three. You could have it where you pile onto your winners. Say, hey, I'm going to set a bull or a bull to be true. Say, if this unrealized profit gets below 200, I'm going to set that bull to be true. And then if it comes back, I'm going to then enter a second contract. And that might be how you pile on to your winners. So you set the bull to be true, saying, okay, it went down, it came back, that's confirming my entry. I'm now going to double down because I think this is going to be profitable, and I'm going to enter two contracts then. That's a system I've never seen anyone use. It's a good idea. You can try it out. Um, and that's just get unrealized profit when it equals negative 200. You set your bull to true, and then one when unrealized, and then if that is true, you say, if this is true, when unrealized profits equal 100, so you're in the profit, I'm going to enter a second contract. And then if both of those are true, you could either change your target, or you could keep it the same. If they're the same label, so they're both labeled short, you can use the same profit target, and they'll enter the same profit target. So that's one thing you can do. Another thing you can do, instead of having a hard target, you can have range-based targets. So one of the things you can do is say, okay, I want to have some variables where I'm capturing the range of the last, say, 10 bars. So if you say, okay, I want a 10-minute range, I'm looking for a reversal system. So I'm going to say the last 10 bars, I'm going to take the high and low. I'm going to subtract the low from the high, and that's going to give me my range. And then I'm going to say, likely we are going to have similar range in the future. So then I'm going to make that range my profit target. And I'll show you how that works here. I have some code that I've coded for that. So um, let me find where I just coded that. Alright, so I'll pull that up on screen here once I find it. Alright, so this is a strategy I have called Jon Snow. And what this does is it has I have a lot of different things. This is kind of throw things at the wall and figure out what happens. So this is a pretty in-depth algo, but we're going to go over a few things here because it covers a lot of things that you guys want to know. So I'll blow this up on my screen so you guys can see it easier. So I like to also have the ability to select the day of the week. So I have that selection here. And then here is your range targets that I was just talking about. So what I'm doing here is I'm looking at the last 5 bars, and I'm getting the high and the low. And then I'm setting a variable for what the difference between the two is, and the same thing for short. And then I'm setting my targets based on here. And so what the second part of this is it's taking the close of your entry, and then it's adding the range to it. So it's a point range, so That's how that works. I have a variable where I can make a percentage of the range. So I could set this variable to 50, say long range size, and that's going to times it by 0.01 to give it a percentage. So then I'm getting a 50% of the last range is my target. And I have a one-to-one risk on this for long and short, but you could do long range size, PT long range size, stop loss variable, and set them different if you wanted a different risk reward. Now, if you wanted like a RSI condition based exit, this will satisfy you here. Basically, what I have, if I'm long, and let's say I like to go, if I'm long and RSI crosses below 90, that means it hit oversold and is likely going to come down based on my experience. So I'm going to exit because price is starting to come back down or the strength is starting to diminish. That's probably going to be the max that I'm going to get on that trade, or at least short term, and I can enter a new trade. And vice versa, I have it cross below or cross above. So let's say you could have it where it crosses above 90 and you exit, or you could have it where it crosses below 90 and you exit, or you can have both cross above 90, or if the trade goes, under strength of 40 or 50, maybe it's starting to become a bear trend and you want to exit early before it hits your stop loss, you can do that too. So you could use any indicator you want for this. I for this example I'm using RSI. So those are some examples of what you can do there for range exits. So like in this particular one, I have a bunch of different things that I can use. So I have hard targets, range targets, and then I also have a trailing stop that is activated, so I can use a trailing stop on its way to my profit target. So this is what this does is I have my hard targets or my range targets, but once I say those are $1,000 I'm trying to capture. If I'm looking at my strategy and it's hitting 400, 500, $600 a lot, and then giving it back and hitting stop loss, that's a profitable strategy that you're giving money back for no reason. So one of the things I've started doing is if I get $500 in profit, I'll either use a break even with say a $100 buffer, so I'm making at minimum $100 on that. So instead of that trade going south and hitting my $500 stop loss, I'm now making $100 on that, and so that's a $600 difference in your outcome. It's going to lower your drawdown and it's going to increase your profits. What I have here is a trail. So once I get to say $500, I'm going to add a $400 trail. And so every $100 I make, I will capture that and it'll lock it in. And so if I made, let's say it gets to $800 profit and doesn't hit your profit target of 1,000, worst case scenario, I'm making $400 on that trade. Let's say it hits the $1,000 profit target, then the trail never gets hit, even though it's moving your stop up and protecting yourself. You're still getting the max profit on your trade, but you're protecting your downside. So protecting your downside, especially for you guys that use prop firms, is, I think, almost 100% necessary. Because if you want to capture trades, you need to have a little bit more risk in terms of your stop loss for them to have a higher percentage. But when you're in profit, you need to capture that profit. And it's especially true with Apex or any prop firm where you have the intraday trailing stop. Um, Protecting your profits so that you don't, because think of it this way with Apex. If you have $1,000 profit target and $1,000 stop loss, but you make $800 on that and then it hits your stop loss, well, to Apex, that's an $1,800 loss that you just had. It's not a $1,000 loss, it's an $1,800 loss. And that's why I've started using more and more of these types of systems with my prop firm accounts. So, what questions do you guys have about order handling? These are just a couple ideas for you guys to help protect your profits. Um, there's so many different things you can do with order handling. I just kind of wanted to get your guys' brains going to think differently than just one profit target, one stop loss. There's so many different things you can do to protect your profits. And I think this is probably where most people struggle the most, which is why I wanted to cover it. CMB, does that answer satisfy your question though, what I just showed? Any questions on order handling? Who had the questions about Fibonacci? Can you ask me that again? Sure. So Fibonacci can be used effectively, and you can also shoot yourself in the foot if you try to do too much. And it's a two-edged sword there. So you want to make sure, let's say you're using a Fibonacci retracement for stops or targets. And so let's say you would use this in a mean reversion strategy. So you need to capture the low of, say, the last period or the last range. So if you're using a mean reversion strategy, you might go, you might take the high and low of, say, the last 60 candles, and that's your range that you're going to set your Fibonacci in. So let's say this is our Fibonacci range, and you get your mean entry, and let's say just for, we'll use this one right here that gets stopped out. And another thing you could do is you could set your stop loss on this to, say, the most recent high, and then maybe add a couple buffers there. That's a really good thing to do on mean reversion, is set your stop loss based on the range and the high and low. So let's say if we entered long here, we might set our stop loss down here, and we wouldn't have gotten stopped out. Maybe use the last 5 candles or last 10 candles high and low for your stop loss. Well, that's great if you're going to use a Fibonacci based system, because that goes in line with saying, okay, if it's going to continue, it's going to go beyond that 100% or 0% mark. Now, let's say you wanted to use, there's the 38, the 50, and the 61.8, and that's your golden zone. So this right here is primarily where price targets go to, is in here. So let's say if you wanted to have 3 contracts you enter and scale out one at 38, one at 50, one at 61.8. That would be one way you could use Fibonacci retracement. You could use it to, instead of using it as a profit target, you could use it as a way to set your break even. So let's say once I hit 38%, I'm then going to move my stop up to 23%. That's another way you could do it. And then vice versa. If you are using a trend-based system, you're going to use extensions. So up here is an extension of the previous move. So you're going to use it based on the low and high of this move. You're going to capture, you're going to want to get towards a 23. Why can't I move this? Let me just set a new one. Maybe it's my, I think it's, yeah, there it is. Okay. So I'm doing the low and high of this move to set my profit targets. There we go. So then what I'm looking at is you could set your stop loss based on this trend move, maybe at the halfway back, the 50%, like right here. And then you set your profit targets at the 23, the 38, and the 61. That's another way you could do it. So you wouldn't, on this particular case, have hit all of those stop targets or those profit targets, but I'm just showing you a way that you could use Fibonacci, which is what you asked. So does that? So you're setting your stop based on the range that you entered in. So you're capturing this range and you're looking for an extension on your trend, right? So maybe what you do is if you're making a trend-based algo, what I would do is actually use a retracement of the 23% for your entry. So let's say you have a move here and you want the move to be X size, 100 points. You then place you can either do it limit orders or just a regular market order. Market orders more sustainable with less complications. So let's get rid of this and let's do a retracement here, and I could show you this. So let's say you captured this. You say, okay, this moved 100 points. I don't know exactly what it is, but looks to be about 100 points. And so this is actually exactly a 100-point move almost. And so I want my entry. I have that backwards. Hold on. There. So I want my entry either, you could have a two key here as well. So you could have it set when it hits the 38, and then your entry is when it comes back above the 24. Or you could have it where, trend is true. I want to buy the 23% retracement, and then I'll set my stop loss at the 50%. And then I'll use the extension to set my profit target at 23%. So I'm risking 25% of the move to make 50% of the move. That's a 2-to-1 risk reward. That's an excellent way to make a trend to algo based off of Fibonacci's using ranges and not indicators. One of my strategies uses Fibonacci retracements for mean reversion, basically doing almost exactly what I just said there. So it's a little different, but I've used Fibonacci's a lot in the past, and there's a lot of traders that use them too to very good success. But you got to have your systems for it. Try some things, trial and error. Um, Watch some YouTube videos on Fibonacci. You'll see what the golden zones are. You'll see if XYZ is true. There's a 70% chance for this to be true, and it does play out, a lot of how those work. So, yep. Okay, RGM's got some questions in the chat here. When you use multiple targets as stops, do you set stop loss and set profit targets, or do you use exit limit orders? Uh, you could do both. It depends. So you could do. I usually do set profit targets. I might label the entries different with different labels for exits, so that way um, I don't like using limit orders if I don't have to, because then you have to code to cancel them, and there's more variables you have to work with. Using just set stop loss and set profit target, using the managed order system, is easier and more reliable with less complications. Have you ever coded strategies using range bars? I have when I first started out, because they always look really good. Um, I haven't had success with them when I put them in live trading or sim testing, and so I kind of just gave up on them. Not to say that you couldn't make a profitable strategy using a range bar or a Renko bar, but I just avoid them just because I feel like I'm just wasting my time most of the time with them. Maybe others have had success and can help you there more than me, but I don't have a ton of experience because I don't think I've coded a range bar strategy in over a year. I think the last one I did was my Fibonacci grid system and I did it on TradingView. I never ported it over. I should, but I used Renko bars, and it was really good on TradingView. In actual practice, I didn't test it enough to know if it was sustainable through this year. All right. Gap system. We got a few more minutes here, and I started a little late, so we can go a little later. So let's take everything off our screen, and I'll go over what I have discovered that makes a profitable gap system. So we'll take all of our strategies off the screen. We'll take all of our indicators off the screen, which we have. Strategy. Reset this. And here is one of my main reversions that I had today. Looks like we're in a long right now, and I had a stop loss at a mean reversion right here. But those are some of my trades in Sim today. So let's go ahead, and if you guys downloaded the D value, we're going to talk about that and how to use that to create a profitable range system. So make sure it loads, make sure the open time is the same. It matches whatever chart that you're using. So if you're mountain time, it might be different. This is Eastern. If you're Central, it'll be 8:30. If you're Pacific, it'll be 6:30 or whatever. Mountain, it'll be 7:30. I don't remember if we're in daylight or not for Mountain because I don't live in Arizona. So I live Central time, but my Ninja Trader's in Eastern, by the way. So because most of the people I know are Eastern, so that's what I do. So here's what we have here for D value. So I'm going to hide these to make this easier to see. So I'm going to explain what this is, and I'm going to explain how you can make a daily gap fill system that I have found profitable. So this is basically a volume range profile. It is the red is pre-market, the green is the cash session. So this is showing you where volume has traded in relation to price. The green and the red, these big bars here, is what we call value. So between those is where price traded the most based on volume the previous day. So this green and red is from yesterday, and this green and red is from yesterday. It shows you where the most volume of trades existed. So traditionally, if someone wanted to make a gap system, they would use RTH hours. So instead of the instrument hours, you would use US RTH. If I can click properly. And you would play the gap from the overnight trading. So if it left a gap, for here, you would play this small gap from the previous day. That's not a very good example. Here's a better example. So there's two ways, theory-wise, on how to play an RTH gap. There's the gap fill, and then there's the gap extension. So gap extensions are actually a really good sign of a trend day, so write that down. If we don't get a gap fill, you likely have a trend day. That's one way to use it as a filter, but if you wanted to trade it, let's say if price doesn't go below the gap in the opening range, and that could be the first 15, the first 30, you could then predict that we might have a likely trend day, and then you could follow that trend of whatever the gap up or down was. So if it's a gap up, you would long and then exit on close, and inversely for that. Now, if we start to enter the gap, the theory is if we enter the gap, we most likely always fill the gap. And you can see that to be true here. Unfortunately, trying to find a repeatable, profitable system, for me, I have created probably 3 or 4 of them. They were all profitable. So yes, you can make a profitable system using those two theories, but the drawdown on them, I found to be inconsistent. And it was a big drawdown system, I think over 10K. I think my system made 60K in a year, and it had like a $15,000 drawdown. So very good if you have large accounts, right? It's going to make you money. But for me, trading prop firms, it didn't personally fit my risk profile. Everyone has different risk profiles. Maybe you throw it on a micro, and then it's making 6K in a year with a 1,500 drawdown. Maybe that's more of a risk profile you find acceptable. Now, what I have found is if you use value and this indicator to create a value gap. Those value gaps tend to get filled because then we're building out poor structure and building a base that then price can move on. So this is based on auction theory, which my company TFC teaches, and this is what we use primarily for trading is auction market theory. And that's what this does, is it uses auction market theory to predict where price will go. And what auction market theory is basically saying is investors that buy and sell during the day are trying to find value. So let's say if something they think is the price is too cheap, they would say that's value, I'm going to go long, that's going to push the move up. If they think something's too expensive, they say no, that doesn't have, I don't want to pay that. Like you wouldn't go pay $10 for a McDonald's cheeseburger, but if you found a McDonald's selling a cheeseburger for 50 cents, you'd say hell yeah, I'll buy that. It may not be the best cheeseburger in the world, but that is valuable to you because it's a good meal for a cheap price. It's the same thing with the auction. What you're trying to do is find out where people, aka market participants, find value. And that's how we use the volume profile, because then we can see, okay, where are they participating in the auction? You can see that, we have these volume profiles. These are called nodes of buying. So this is where buyers and sellers are interested in participating. And then when you don't have that, that's where you get those fast movements between there. So you can see we have a gap in value here because buyers no longer find this valuable up here. So they're not going to participate till they find a level of value, and that's why you get these sharp moves up and down a lot of times through these market profiles. And so let's go back to a overnight profile here using our data series, and I'll show you I did a whole bunch of data crunching on this. I even made a strategy to test the percentage that gaps were filled, and I'll show you that here in a second. So, that's not what we want. We want this. We want the instrument hours. So we're going to go back up and use the instrument hours. And this system is looking at where price opens in relation to value. Because what I have found is when there's a gap in value when the market opens, the cash session, we tend to fill that value. So I'm going to add a strategy here I made, and I'm going to discuss this with you. I made this yesterday. And what this is, I made it to test, and then I actually ended up turning it into a full-blown strategy. So what this does is it looks at the size of the value from the previous day, which you don't have to do. You could literally just say if it opens above value, it's likely to close the gap to value. And that doesn't mean it's going to fill the overnight gap. What it means is it's going to fill the value gap. And let me show you that on the chart here before I enable this. Let me find a good example of this. So I'm looking for price. This is a bad example. This one started so far below value, it ended up being a trend day down. Yasin, can you mute your mic until we have questions, please? Thank you. So here's a day. This isn't no, that one didn't open either. Okay, I'll find one. Let me load 90 days here. I don't have enough days loaded. Thank you, appreciate that. And this is recorded so you guys can go back and look on this. So we haven't had a great scenario this week, but a lot of times, here's one. Okay, so here's a day that we opened above value. So you can see the overnight session. We don't care about the overnight session. We only care about how we open in relation to the previous day's value. So here's where we opened above value, and this would not have been a large trade, but it would have been a profitable trade. So what we find is on NQ, I believe this year, 76% of the time that we either open above value or below value, which the red is the low previous day low value, and the green is previous day high value, we will fill to value. And sometimes we keep going, but what we're trying to capture is this right here. We're trying to capture this move right here. And we would enter on open and play it and set our profit target immediately at value. and I have found that to be effective and profitable. And let's see if we can find a short scenario which has the same thing. Here's one. This was a test and go day where we opened above value and then we filled the gap to value, and then we immediately found buyers there because they still found that to be profitable and they still found that to be valuable, and then they pushed the price up to where they got exhausted, came back down and tested value again, and then we trended the whole day. So what we're doing here is we're just trying to capture this opening value, which is right here. So we're capturing this move, which is a 30 point or 120 ticks we would have captured there. I want to find a short example. Here's another one. We opened above value, so we opened here and then we filled the gap to value. And so sometimes you need a little bit more leeway on the stops, but we almost always fill that gap to value. So you can play around with your entry systems, which is what I have been doing recently. Trying to find one that opened below value. You can see as we go back, if it opens inside value, we just would not take a trade because we don't like the setup there. So this will not trade every day. Here's one where we filled the value. Oh, this was, no, right, that's not one. Here we go. Here's one that opened below value. So you can see we opened below value and immediately went to retest previous day's value area. And then we went back down. And you can start to see on the chart how these levels are extremely important, and we bounce off of them almost to the tick a lot. So capturing these movements can be very profitable. So here's where we opened here, and we were capturing this opening move here. You know, we're looking at that's a 40 point or 160 ticks we just captured there. These on average will make almost $1,000. So let's go ahead and let's see if I have a template. I just made this, so we'll throw this on and we will apply it and see if this works. And then I'll have to re-enable the data series. See if we can find some trades. Did I enable it? I was playing around with it. I don't know if I enabled it. Okay. Yeah, here we go. So I've been playing around with different systems on this. So you can see here, this one tried to fill that gap there. I don't know if that was correct, but here's one that's doing exactly what I just described. So we're entering on open and we're filling that gap to the profit target here. So captured that whole move right there. And this one I've been testing like 10 different entry systems. But you can see here in the last 3 months, it's up 15,000. It's my entry system captures, 62% win. Average win is 1,600, and I have a hard stop at 1,000. You can see we do analysis here. You can see it's a decent curve. It's not a huge sample size, but we could increase the sample size, and I'm sure it would hold up. So if we say did the data series, we did 180 days. And we just did the real-time and historical. You can see year to date, it's captured about 24,000 with a $6,000 drawdown. And I was playing with the entry systems yesterday, so you could do different things with this. For example, with mine, I had it where it actually takes 2. So what'll happen is let's see if I can find a good example of when it takes 2. I was testing out where with a tight stop loss on the first order. Yeah, here we go. So this is an example where I have a double entry system. So I have a tight stop loss on the first entry. So let's say if my stop loss gets triggered on the first entry, I then I capture that as a bull or as a key, and then when I come below that, so price starts to revert, I'll take a second entry, and my second entry will have a wider stop, but it, it it was profitable, as you can see. So our first stop gets stopped out, and then we enter a second stop, and that hit profit target. So do you guys understand what I just explained? I know it is probably different than anything you guys have seen if you're not familiar with auction market theory, but there's a lot of things that you can do that are repeatable based on it because it's literally how participants are participating in the market. It's not just some indicator with an oscillator like the first strategy that we made. It is literally how people trade. All right. RGM has a question. Did you code this value indicator yourself? No, I did not. It's a well-known theory, so there's a lot out there that you can go find. If you wanted, you guys can join TFC. I'll give you the first month free. You guys are welcome to. We live trade every day. You can learn auction market theory with us. Otherwise, there's lots of free materials out there you can go learn for yourself too. It's just whether you guys wanted a structured education environment or if you want to teach yourself. I think both are fine. And I'll throw some links in the chat if you guys want. Jacob allowed me um, to tell you guys that, so I do have his permission there. And I'll put that in the coding chat, otherwise it's in the algo chat there. Make sure you use his link though, because I am giving him credit for if you guys do sign up for TFC. We have wonderful educators, Sig and Dapper. They live trade every day, so you could trade with them and ask them questions. We have weekly classes. We have weekend walkthroughs for what to expect for the week, and then we have midweek videos on updates if there's needs to be an update on how the market is. So we give you the levels that we think things will trade for the week. We give you likely scenarios based on the auction, and so on and so forth. Okay, that was my one commercial, my one commercial, and then we'll get back to the education here. Do I teach within TFC? Are there classes for algo coding? So TFC is strictly a manual trading company. We teach auction market theory and help people learn how to manual trade. Yes, you can take those principles and go make algos with them, but TFC does not do the automated trading. So I personally code stuff off of them for myself, and you could as well. We do not teach coding. That's what Jake does, so I don't want to infringe on what he does. Hopefully that answered your question. But if you guys want to try it out for a month for free, we also make trading view indicators that are private. You would get a month access to those as well with Jake's code. Just make sure you sign up for the combo plan. And make sure you put your trading view name in there so we can approve you. Do the value levels only take into account regular trading from previous day, or do the value lines calculation? It's just the cash session, so it doesn't. I don't believe it includes the overnight as well on this indicator. And what that's doing is it's looking where 70% of transactions took place. So it's not the full day. It's looking for where the main 70% of transactions took place from the previous day. So that was my class today. Hopefully you guys enjoyed it. I'll stay a little longer if you have questions. I'd be happy to answer any additional questions. We'll go to about 1:30 if you guys have questions. If there's no questions, we'll leave it there. So what is my process for developing a system and when do I add more stuff to it? Is that the general question that I think you're asking? Yeah, if that's the question. Yeah, so someone spoke to this the other day. Overfitting, in my opinion, generally isn't, you would like to avoid it if possible, but it's not necessarily a really bad thing because you can overfit stuff and it'll work. The problem is it may not work forever. So you're overfitting it for the current conditions. If those conditions change, then the effectiveness of your algorithm will probably change as well, and you'll have to re-optimize it and refit it. So what that means is if you don't have a lot of conditions that you're fitting and your sample size is large, you would expect it to last longer and be effective longer. So if you're fitting a system to say 10 years market conditions and you only have 2 to 4 variables, you could expect that system to be effective longer than say if you fit something to the last 6 months of data and it has 8 settings. That might only last a couple weeks, that particular setting or that particular overfit system that you have, because I would classify that as overfit because not only are you fitting it to a small sample size, you have a lot of variables, so your optimizer is going to go find those exact trades that you fit it to, and we may not get those exact trades in the future. Now, in terms of what I do is I try to start simple. So with this, all I did originally was, okay, enter on open, no stop loss, exit when we fill value. That's how I started. It was profitable, but the stop loss sometimes, or the drawdown, you might have a day that trends from there. We have the gap and go, and there was days I was losing 3 to 4 grand per mini. That was unacceptable for my risk profile. So then I had to decide, okay, I'm going to lose out on some profitable trades, but I'm going to set a stop loss at 1,000. And if it hits 1,000, max I'm going to lose in one day is going to be 1,000. So then I start going, okay, the entry system on this, it's simple, right? There's no settings for it. It's just if we gap up or gap down, we go long, we go short. Now, you could get a little bit more into the weeds by saying, does the size of the gap up matter? Do you want it to be, make sure you're under a large gap up or a large gap down? Because if we have a large gap up or gap down, that could mean we're going to have a huge trend day, because that probably is off of news. Generally when we get the overnight moves, it's off of news. And yeah, does size matter? I don't know. Ask your wife. But how did I determine a stop loss of 1,000? It just is what I okay with risking. You could play around with it and fit it, but that was just I'm okay with risking 1,000. So, yeah, the size of what I found was the size of the previous day value is what mattered more than the size of the gap up. Now, the size, they both do have an impact on the win rate, but overall, you could maybe take your win rate up 5 to 10%, but you're also cutting down on your sample size, so you're gonna take less trades, and they may be more profitable. And so it's up to you if you want less trades. Maybe that's something that you like. You're like, I just looking to add a system that takes 20 to 30 trades a year when we get those scenarios and makes 5 to 10 a year, and I'm going to add that to my portfolio of algos, and it'll fit in real nice, right? You don't need it to be your main system. You can have less trades. That's fine. I would also look at, guys, just another thing you can use for like a filter is the overnight move does have an impact on how the cash session trades. So that's something I've been studying a lot this year. Is there's 2 sessions overnight. There's the Asia session, which is at the end of the previous day, and then depending on where you are in the world, I'm talking U.S. hours. I live in Wisconsin, by Chicago and Milwaukee, and so I'm talking in relation to me. I don't. You guys are probably from all over the world, but um, we're looking at the Asia session, the Euro session. Based on the size of those, we might predict, how much volatility we're going to get in the cash session. And then also based on if we have expansion of the Euro session of the over the Asia session, we could see continuation there. And then if vice versa, if you have a Euro session where the low of the euro session and the high of the euro session is lower than and higher than the Asia session, you can expect more volatility during the US cash session. And that has a lot of confluence with it in my testing. You're talking 70 to 80% of the time that happens, we get extreme volatility. So those days might be really good for mean reversion strategies. So that's a way you can build a filter off of price movement and not using an indicator. Just some food for thought. I see. I appreciate it, Jim, RJM, Jim, Ronald Jeremy McCaffrey. I'm gonna say that's your name. Born in 1903. Man, you're old. Locke, you have a question? I don't speak. I don't speak that language. Is that Chinese? Any other questions? Always, we'll wrap this up so the video isn't too long. Locke, can you mute your mic unless you have a question? Locke Fuho. Would appreciate that. I'll post it right here. I'm gonna upload it to my YouTube, but I also can share the Screencastify link, so I'll share that right away. It'll take a while to load to YouTube because it's going to be a long video, so um, that'll take a while to get loaded there. But I can post the link right away, and you can watch it right away. All right, thanks, Ed. Have a great day. Thank you, guys. All right, we'll wrap it up if there's no other questions. Any other resources to learn? I might have missed it. I apologize. Go ahead and ask again. Yeah, you could ask it here. That's fine. Then people on the recording will know what it is too. Okay, yeah, I understand what you're saying. I can answer that. Yeah, so do I use the same entry system for exiting, or do I use the same risk management system for all three? You know, because you have your entry system, you have your exit system. Do I use the same systems? No, I don't. Um, I typically will look at the type. So when I set out, I look at my portfolio. I say, what does it need? What am I missing in it to make it more stable? And so I'm trying to add something that has low correlation that captures price movement that I'm not capturing. So if I'm not capturing trends, I'll say when I set out to capture a trend, I'll look at that and say, okay, I'm going to, with the trend algo, you want to have your filters for that. That doesn't necessarily mean I'll use those same filters for an exit, right? So let me find a trend day here. Where's a good one? Well, here, this is a trend down day. We could just stay here. Um, this was a a gap up and go. We had a likelihood we're going down. I might want to capture this last move here because I could say, okay, we're below the open. Um, so if we're below the open, that means we're filtering it for only shorts on a trend day, and if we're above the open, we're filtering it for only longs on a trend day. And then you might use, say, a double EMA to determine a trend day as well, or you might use an EMA difference on a higher time frame. And what that's doing is it's saying I have a fast moving average, so it's saying the fast moving average is below the slow moving average. That means we're trending down. So I may use that to help me enter a short, and then I would enter a short on a pullback if those scenarios are true. Now, I might have an exit system that has nothing to do with those filters. It may be built on overbought and oversold. And so that's my exit systems are primarily built either off of levels, percentages, or overbought and oversold, if that answers your question. Yeah, 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 I mean, your question was more in relation to the systems used to exit and enter. I was talking more broadly, but uh, play around with it. Look at the chart. Look at where your entries are and saying, what can I do to capture the most money there? And then if you want to, you could you could go and you could throw an indicator on the chart and look at your trades, and you could look at the trades versus the indicator to see if it would help. Then you don't have to code it. You can use the eye test. Does it pass the eye test? If it does, then you might have something. Then you might not also, but using the eye test to help you filter things will save you time because if you're just coding it, um, it might take a while. So, oh, I don't have it on this computer, but you could have a 14 EMA and a 200 EMA, and then basically what you're doing here is you're saying this 14 EMA is below the 200 EMA the whole day. So that means we clearly were trending down the whole day just based on those two EMAs. And maybe you could have a two entry system. So if the distance between these EMAs becomes really small and then it expands, you might enter a short there. That's a way to use those indicators in a way you may not have thought about before. Instead of just doing EMA crossovers, you could look at the distance between them and you could use a two key method for an entry there. So you're setting a condition to be true and then your entry is on confirmation. Okay, guys. I don't want this to be a 2-hour video. Hopefully, you guys found value in this. Hopefully, it helps you create more profitable strategies. And if you guys have questions, hit me up in the chat. Shoot me a DM. That's fine. If I have time, I like chatting with people. It's better than staring at a screen all day. So I'll get this posted. I'll put it in the general chat as well as the private chat for you guys. And then once I get it on YouTube, if you guys want to help me out and watch it on YouTube, get me some views, that always helps the algorithms too. So, RGM, last question. I will answer this one because I think it's important. Do you have any other resources to help you learn algo coding, or at least resources that'll help you figure out how to code something? Yeah, Google. Google and the NinjaTrader documents is what I use a ton. Um, I will go try to find either a strategy that incorporates what feature I'm trying to add, and I'll learn it that way. I will use the strategy builder to code it for me, and I'll learn that way. Or if I'll go, what am I trying to add? And I'll use Google, and I'll try to Google it. You can use Chat GPT that they have GPTs made for NinjaTrader. They're not perfect, but it could give you a starting point. A lot of times their references are outdated or they don't label things correctly, but it might give you the structure that you're looking for, and then a couple Google searches will help you fix what you're missing. So those three things would be what I would say. Google what you're trying to code, read the NinjaTrader documents that they have because it shows you literally there, or use the strategy builder. And then if you really want to, you could try ChatGPT. I'm sure you'll get mixed success with it, like I have. I do have another one called Easy Algos that I've been working on because I'm trying to build an algo company as well. But I don't post there. I don't think I posted there in quite a while. I should post some more videos there. But TFC is my main YouTube. That's where I have the most subscribers.